Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Right Guidance. Get the right tools to be able to know more about the financial markets and make profits from the financial markets. So today is the market fundamental and technical breakdown for the time period of 2nd of December to the 6th of December. So how this usually goes down is that I'm going to first of all go through the technical charts. And we added a new chart today, XAU I got popular demand and we added XAUSD. So the four charts we'll be going through is one is Euro USD, AUD USD, XAU USD, and BTC USDT. So right now, when we're done with the technical chart, we'll dive down to the fundamental that is going to run the market for the week, because the fundamentals is what triggers volatility and liquidity into the market, like micro news events, geopolitical events, war, and so on and so forth. So we're going to also analyze that as well, and then call out a trade if you see a tradable opportunity. Okay. So with that said, if this is your first time, you're welcome. Smash the like button, share this content with your friends and family, and subscribe to the channel so that whenever we drop content, you would see this content and also be able to be educated with this content. If you're a regular member, thank you so much for coming back. And also, I appreciate your time and your effort to become 1% better than the trader you used to be before. So let's dive into my screen right now and then continue from there. Okay, guys, right now you're inside my screen. And before I predict this week, 2nd to the 6th, okay, I'm going to show you the forecast we did for last week and how it played out. This was the forecast on Euro USD. Last week, we said that we had a 4 hours demand zone up on Monday. Told you when the market comes back into demand zone, supply zone, and that is exactly what the market did. Let's go down to AUD USD. On AUD this was our forecast. Our forecast on AUD was that we were expecting market to come towards this supply zone over here, because we see that the overall trend is a downtrend. Once it comes to the supply zone over here, we're not looking for a sharp drop in the market. What did the market do instead? The market went down before going more up. Just the same reaction Euro USD had. So this forecast was not really aligned with our prediction. So then the last was BTC USDT. BTC USDT. We had a forecast on BTC USDT, and although the structure of the market has really changed, and I've been on track with this particular chart. So just go through the last video, and then we'll be able to continue from there. So I'm going to start with Euro USD, and remember, this is a new moon candle. Okay, a new moon just started, and based on analyzing the market on the monthly time frame, we first of all analyze the candlestick patterns on the monthly time frame. That's what we analyze, candlestick patterns. And from the candlestick patterns on this monthly time frame, I can see that this market is moving to the downside. This is what a bullish candle, and then we had this bearish engulfing candle. The month of November was also bearish, which had a very strong candle to the downside. And then it created this week. So one thing I see for December is that there is high probability, like I said, high probability of December candle coming to fill this week over here, taking this low, okay, before we can now start seeing any push to the upside. Okay, so I see December candle coming to fill this upside. That's candlestick pattern here. It could just literally from this demand zone you see over here, which is a reversal zone, which is marked with this ash box. I marked it out over here on the monthly time frame over here. because you see that a lot of candles has come towards this zone and then moved up. This candle, so yeah, this doji candle come towards this zone and moved up. So this is like a rejection zone. So we see this candle come towards this zone again, and we see a bullish pattern. We'll be taking this bullish pattern to the upside for the EUUSD. Then let's go down to the weekly time frame. Yeah, for the weekly time frame, we look for chart patterns. We look for chart patterns on the weekly time frame. We look for chart patterns on the weekly time frame. So literally, what I am seeing right now on this particular weekly time frame is this blue candle over here, which was last week's candle, was a bullish candle. Okay, it was a bullish candle, and the week before it was a bearish candle. And based on this bullish candle that closed last week, it was a week on the monthly candle. Okay, on the monthly candle. So there is still high chances that this week, which is the first week of December, is going to dip down. Okay, it's going to go down towards the low of this previous week. It's going to create a week, okay, on the monthly candle. Yes. Meanwhile, for the pattern I see, we have different patterns. We have triangles, we have double top, double bottom, triple top, triple bottom. You understand? We have different type of chart patterns. So, but what I see currently is we had this first touch over here. We had this first touch. This is the first bottom, okay? We have this second touch over here. This is the second bottom. And we have this third touch over here, which is like the third bottom of this particular region, this reversal region, which we have seen in the past. So with that said, there is high chances that market will start rejecting from this particular region, the same way it has rejected twice over here. It can reject and start pushing to the upside for the month of December. But before that, the month of December needs to create a week for the candle. It needs to create a week. Okay. So that's what I see currently for this weekly time frame. Then for the daily time frame, wait, I need to mark out the high and the low of the previous week. Yes, before we move down to the daily time frame, let's mark out the high and the low. So why it's very important to mark out the high and the low is because if the chart or the smaller time frame chart takes out the low of the previous week, we know we are going lower. But if it was a liquidity grab, then we know that we'll be going higher from that low. So, but we need to know that particular low and high of the previous week. That's why we are labeling it this way. Good. Then on the daily time frame, what we watch out for on the daily time frame is the prevailing trend. And then based on the prevailing trend I see on the daily time frame, I see a daily time frame what calls. This is the last red candle, which is also can spot it out as a demand zone at this point. This is the last red candle before we had one. So there is still high chance that also towards this the daily calls. Meanwhile, the prevailing trend is that is what the daily time frame is. It's straight a prevailing trend. Okay, so correction, impulse, taking those lows. So I see that the daily time frame is no, I deleted something. Okay, so I see that the daily time frame is on a downtrend, and based on what I see on this particular downtrend, if we expect this market to create a week for the monthly time frame, and then also for the weekly time frame to come back and get a third touch, then we can also expect market to come towards this daily demand zone. I expect market to come towards the daily demand zone first. Okay, come towards the daily demand zone. Yes, when it comes towards the daily demand zone, then if we're going to now have a massive projection, okay, on December to the upside, then good. But it needs to come towards the demand zone first to create that week. It needs to create that monthly week, okay, because this is a new week. So I've seen my projection, and due to the prevailing trend, the downtrend, the sales on this candle is going to easy and smooth. So let's go down to the 4 hours time frame. Good. On the 4 hours time frame now, for us to, since we already know our buyers that were looking for these sales, for us to be able to get the actual entries on our 4 hours time frame, first of all, we need to spot out our 4 hour supply zone. Okay, we need to spot out our 4 hour supply zone, and based on the 4 hour supply zone, it's going to be the last green candle before the break of this low over here. This low has been taken. Okay, that's taken. So if you can see vividly, we had the market create this impulsive wave, correction, impulse, correct, and then impulse, then ended the week with this kind of range. But since there's now a change of character, I can see that the first session or New York session to get in on this sell, and then we get into this low. So this is what I see currently for the 4 hours time frame. So since I've spotted out my 4 hours supply zone, let's put out the full. No, let me mark out the change of character over here on the 4 hours. So Once the market comes towards that zone again, we'll be looking out for our entries to the downside on the 4 hours. So this is where my supply zone is going to be, which is the last blue candle before the drop to the downside. So if I literally see the markets move up towards this zone, I'll now start looking for my sales, because you selling from this area right now is a premium sell, is a premium price. The market maker makes money in 3 ways: selling the market to you at a premium price, okay, taking you to a whole different direction. They want to buy, but they would manipulate you to take a sell, and then they will buy. That's the way the market maker makes money. And then the third way is what, taking your stop loss. So even when you are right on the direction and you enter at a discount price, make sure that your stop loss is enough to be able to cover the range or the move in the market. That's it. So let's be mindful of it. So this is what I see currently for the 4 hours time frame. So once the market comes towards this zone again, we'll be looking out for the sell. Yes, for sure, the sell. And then we'll be taking it to this low. And if we're able to get that move, we'll be able to cover just on one single trade on Euro USD, just one single trade. You need to get it as a sniper. One single trade, we can cover around towards this low. That's roughly 150 pips on this move, 150 pips. Okay, so let's watch out for it. Let's watch out for it. So that's it for Euro USD. Let's go towards the AUD USD now. AUD USD. Let's start from the monthly time frame first. There's a new moon candle. Okay, so for AUD USD, let's first of all figure out what's really going on here. And based on what's going on, we see that the month of engulfed September with a bearish candle, and then November was also started off. But there's something you need to realize. There's something you need to realize happen right now. There are two, because I like to see what the market has. Based on this part, is reversal zone, the bearish candle, the second bearish candle, and then didn't touch this reversal zone. After it went up. Okay, we then had another bearish candle that engulfed this bullish candle. Then 3 bearish candles in a row that came into this zone before there was a reversal. So literally, we could still see a bearish candle that would come towards this zone. 1 or 2, we could still see a bullish candle that could just move to the upside to engulf the November candle, because same point, December candle could be a bullish candle, 1, and December candle could be what? A bearish candle that will drop further towards this zone. Okay, it could be a bearish candle that will drop further towards this zone. So that's literally the 2 play out. So anyhow we are going to play it, I will make sure that first of all, we don't take a big loss. Just try as much as possible to avoid a big loss, and then try as much as possible to what you can make a little loss, little profit, or massive profit. But one thing is that once we miss the direction once, we should at least be able to know the future direction by the 2nd week, 3rd week, and then ride the market. You understand? The 2nd and 3rd week is the main push we see in the market. That's the main wave we see in the market. The last week of December, not trading. That's the end of the December. Okay, so just set your mind straight that the first week we might be wrong on the direction, but the 2nd and the 3rd weeks, after the first week gives us a phrase of what the market needs to do. Okay, then the 2nd and 3rd week is when we're going to make the real box in this market for December. Okay, so right now what I see on the monthly time frame is that there is high chances of markets still pushing to the downside, and there's also high chances of markets still pushing to the upside for the AUD against the dollar. Okay, so future news events is going to actually impact this particular market. Future geopolitical events in Australia and in United States of America will also impact this particular pair. Okay, so let's say that we have that view now in mind. On the weekly time frame, what we look out for is the chart patterns. So basically, on the weekly time frame, the chart pattern I can actually see right now is this particular pattern. Okay, so this is a descending wedge. And the way a descending wedge plays out is mainly when this break is a continuation pattern, though. It's a continuation pattern. Okay, so if we see a break, this can also go. If I delete this, let me delete this. If I delete this actually descending wedge, which means the market went into this wedge and ranged up and down. And if it breaks below, okay, if it breaks below this wedge over here, it's a considerable high chance that the market could actually respect this wedge at this point here and move up. But if it breaks below this wedge, then we know that yes, we're pushing more down. But we'll be very cautious once it gets towards this reversal zone, because remember this is weekly candle, and one weekly candle can be massive moves in the market. Okay, so with that in mind, let me adjust this way. So let's put out the high and the low of the previous week. Let's put out the high and the low of the previous week, because it's area of liquidity, it's area of massive reversals in the market. So we need to know if there's going to be a reversal from that point or a continuation when market gets to that point. So I've marked out the previous high and previous low of the previous week. Then we go to the daily time frame. Daily time frame, we're looking for the prevailing trend. The prevailing trend in the daily time frame is plain. We're seeing what? It's a downtrend. Okay, it's a downtrend. It's a prevailing trend. It's a downtrend. So this is it. Impulse, correction, impulse. That was when I was expecting what? A correction for another impulse. Okay, for last week. But the market did not get to that zone. Okay, the market did not get to that zone. Literally didn't get to that point. So, but it's fine. It's fine. What we can then see for this particular week is that based on this market is still within this region. This I can see. What I can see is still within this region. Okay, it's still within this region for the daily time frame, and a lot could really happen. When I say a lot could really happen, this is what I mean. The market could from this point move more down, because this is ranging. The market is ranging to push more up, or the market could really go up from here to continue more up. But the wedge pattern we see on the weekly time frame, my view mainly first, because of that's what wedge pattern we see on the weekly time frame. Okay, so I see more drop. I see more drop on AUD/USD, because this is literally a range. Okay, since the 13th of November, we have just been within this range. Okay, so for AUD/USD, to trade the range, you buy from the demand. But for me right now, I'll not be looking for buys, because the prevailing trend is sells. So I'm very happy that it's currently towards the top of this range. So we'll sell at the top of this range. So if you're to sell, you should look at a supply zone. Okay, you should look at a supply zone. And from a supply zone, which I can see right now, this is like a daily, this blue candle. This blue candle is the last blue candle before the market started going to the downside. Okay, and then the market came towards this blue candle again on the 29th of November. It rejected that particular psychological level and also the daily calls. So we'll mark out that zone. We'll mark out that point. We'll mark it. It's not a zone, it's just a point. So since we have known, I need to delete this box. We don't need this box anymore. So we go down to the 4 hours time frame. So now on the 4 hours time frame, what do I see? I see this supply zone, power supply zone, that the market has rejected not once, not 2 times, not 3 times, but 4 times. Okay, so this is what I see. Okay, so I'll mark out also the 4 hours. That's level, it's a control level of 4 hours. Good. So if I should look for any buy setups, there are 2 points to look for a buy setup. But remember, the prevailing trend is a downtrend. So let's talk about sell setups. If the market still moves towards this zone again, or I'll go down to a smaller time frame to see that if it's going to give us a re-entry zone, okay, then we can take the market for a short towards this level, okay? But the market has buyers as well. So if we are to get buys, I'm looking for a market to move down towards this zone, then move up from this level, okay? Or I'm looking for the market to totally disrespect this zone. Totally, I see this break above that and rated, then you know that yes, thank you, we're going to the upside. And it has disrespected the daily what trend. So that's one thing we need to be aware of, that I also have a bullish picture and also a bearish picture in mind. Okay, because the market can literally move up and move down. Okay, it's reactive, it's actually not predictive. So based on what I can see, this is what I see on AUD/USD. It's currently inside the supply zone that the market has respected countless times. Okay, you can see the market came here, respected it once, twice, 3 times, and it's the 4th time it's here right now. So if we see any rejection, okay, and if I go down to a small time frame, I see an entry level, then we'll call out this rate to a drop. Okay, the target literally is going to be the low, okay, the last week's low. Okay, so if we call out this drop from here, 80 pips drop, okay, it's going to be an 80 to 90 pips drop, because we are still within this range. So that's what I see literally for AUD/USD. Then the next on the list is gold, precious metal. I know that you guys might be wondering, I need to clean these charts. These are all these psychological levels. Okay, good. Let's go down on gold. Gold. It's a precious metal. So on the monthly time frame on gold, what can we see? We can see a lot, but it's quite plain that over here we have this bullish candle, okay, and that's the month of October. Then November was a bearish candle, but remember, it did not engulf. It did not engulf the the October candle, and it's a very serious sign. You understand? There's a lot of traders saying, it's time to sell gold because anything that goes up must come down before you can actually predict. So there is this particular chart pattern over here, this candlestick pattern, not chart pattern, sorry. This particular candlestick pattern, I think it is a reversal candle, and it looks like a pin bar, but I'm trying to remember the name, but based on this particular candlestick pattern, it's a bearish sign. It's a bearish sign. Okay. And what will really justify this is that if December candle also closes bearish, okay, and we know that with that from there, we know that January candle also close bearish. We know that we don't have three bearish candle soldiers, you understand? Then we know that yes, that literally we are seeing a massive reversal to the downside. Do you understand? So that's literally what I see right now on the XAUSD. I'm going to search for the name of this particular candle. This candle has a name, and it has principles that aligns with it. It has principles, and I'm going to drop the details for you guys in our Telegram channel and also on our WhatsApp channel. So just go down to the description and click the link to join the Telegram and the WhatsApp channel. I'm going to drop education on this particular candlestick pattern. But I based on what I've watched it countless times, I can still remember that it has something to do that the market has to go to the downside. Okay. So with that in mind, since we already know what the monthly candle is showing us, let's go to the weekly candle and then find the chart pattern. But before we find the chart pattern, we need to spot out our reversal zones. Okay, I think I'm going to do that on the monthly time frame, so it's going to be easy and smooth. Okay, so let's spot out our reversal zone. I'm marking out these reversal zones. Here are where market has massive reversals and rejections, and I'm not going to, let me put it on the body instead of putting it on the week. Okay. So make that hash. Then clone that. Make that lower. Then clone that. Then it's lower here. Okay. I want this particular zone to cater for this high. The zone doesn't need to be that thick. It's monthly candle. It doesn't need to be very thick. Oh, it's good. I wanted the zone to cater for this high. This rejection here. Okay. Okay, so we don't really need things from the past. We need what will be able to direct us for the future. And this is monthly before it even gets there itself. It's going to take time. So we're more focused on what's really going on here. Then let's go on the weekly time frame. What do I see on the weekly time frame? Chart patterns I see on the weekly time frame. Which chart pattern can I see on the weekly time frame right now? Okay. So based on the chart pattern I see on the weekly time frame, I'll use the monthly time frame to help me describe it. Okay. So there's what they call an ascending triangle. There's what they call an ascending triangle. Let me mark it with this one instead. And a break of the top indicates that bulls are now in control. So let me draw it this way. Let me draw it this way with this particular stuff. So it's a triangle. This way, yeah. So the market goes into this triangle, moves up, move down, move up, move down, and then breaks. Once the market breaks, there's going to be a retest and then a continuation push. Good. There's a principle to trade a triangle, and the thing just came to my mind. Once the market breaks, okay, the first leg of the triangle determines the take profit of that particular move to the upside. The first leg of the triangle, the high and the low, the first leg of this triangle determines the take profit based on the break. This is the candle that broke. Okay, so literally it has hit take profit. If you're on a smaller time frame, like 15 minutes and 4 hours, and you see such pattern, okay, I just described for you guys a principle on how you can be able to follow along with this particular gold chart. Okay, there's a principle you can follow along with this particular gold chart. So we're expecting what market to drop to the downside now. We're expecting market to drop to the downside from the weekly time frame. Okay, so because it has already hit the profit target level, it has already hit the profit target level. So let's mark out the previous week high and the previous week low. Let's mark out the previous week high and the previous week low. Okay, this is the previous week high. And remember, psychological level plays a role on this particular price chart. Psychological level plays a role. This is the high. Let's mark it at previous week high. And this is a low. And this is the previous week low. A break below the previous week low, we go lower. A break above the previous week high, we go higher. Then let's go to the daily time frame to spot the prevailing trend. Okay, so for the daily time frame, based on the prevailing trend, I'll use this trend line to spot it this way. Okay, so if I'm to say this market is still quite on a bullish trend, but still on still, let's go to the 4 hours time frame. No, before I go to the 4 hours time frame, let's mark out the daily demand and supply zone. Okay. Okay, so based on the daily demand and supply zone, I see that this is what is also a supply zone here on the daily time frame. And then this is also a supply zone, a demand zone here on the daily time frame. I'll just mark it out. And I now see something that is looking like a reversal pattern on the daily time frame, which is way clearer on the daily time frame than on the monthly time frame or the weekly time frame, because this is what I see now. I see this as the left shoulder, this as the head, and this as the right shoulder, which means if you see a break below here, it's going to be a reversal pattern. Okay, so this is a reversal pattern on the daily time frame. I see, but on the weekly time frame, because the candles are huge, we can't spot it. But on the daily time frame, I could spot it right now. So the strategy to trade a head and shoulder and principles that align with when there is a break of this neckline, then boom, we're in on these cells. Okay, massive cells. And when we're talking about massive cells, we can see that we're going to have a very huge drop. Okay, this is likely about 5,000 pips, 5,000 pips in the future. Okay, so watch out for that. Once the break of this neckline, that's the principle to trade a head and shoulder pattern. So just align with the principle and then you'll be in good shape. Meanwhile, by then, once that break is completed, that means that we now have a change in trend, which is that we have had the first high and then second high, because we need two dots to connect. But why I have not connected this is because this low has not been taken. So let's delete this immediately. So let's just forget about the view we have on the bears right now. So let this be taken first. If this is taken, then good. But for now, I still see that bulls are much in control. Prevailing trend, uptrend. So let's go down to the 4 hours time frame. Okay, so on the 4 hours time frame, I see the previous week high and the previous week low. And before I go further, we see over here that this week, this market came here after I respected the trend line to the down upside. Okay, he respected this trend line to the upside and then moved up, push momentum. Then came here and took what liquidity at this top here. After he took liquidity at this top, what the market dropped drastically. Then after the market dropped drastically, I see what's more like this particular what what is it called? Corrective structure. Is a corrective structure, not really a reversal. Is a corrective structure. So the market literally broke this corrective structure, and since it already broke it, I can expect gold from this level, okay, to have a little retest and then a continuation drop, okay, towards this what daily, sorry, daily demand zone because it has already broke this corrective structure. It has broke it. So we expect what take this low, last week's low, and then head towards the daily validation point and also daily demand zone. Okay. So based on what I can see, there are still probabilities that once it gets it could even go further. But we can't say right now. But my target is what this daily demand zone, which is also where I have a 4-hour what calls. So I have 4 hours calls. So this is what I see right now on gold. Okay, so I'll be monitoring gold. Gold really has a much appreciated setup. Okay, this was the impulsive move. Okay, corrective structure. So we're expecting that was impulse. Okay, so we'll be watching out for gold literally. Okay, and then I'll be calling out that trade once it sets up. Okay, so that's literally what I see on gold. Meanwhile, I see the supply zone on gold to be this particular last blue candle, because that was the blue candle that we saw before the market broke that particular channel. So this is what I see. So if the market gets any move towards this zone, if the market gets any move towards this zone, I could still get my sales in. Okay, I could still get my sales in and then take it towards this low. So basically, what we can see right now is roughly from this zone, roughly about 3,000, no, 300 pips move. Am I correct? No, it's not 300. This is 8199, which is meant to be 800 pips move. Yes, you cancel the last one, 800 pips move. That's for gold right now. That's what I see for gold right now. So that's it for gold. Then the last on the list is BTC USDT. BTC USDT. Exactly. I already analyzed BTC USDT during the weekend, so it's plain. I'm not going to put in much strength or effort into that. For BTC USDT, I see that we have a corrective structure. Okay, a corrective structure playing out right now, and everybody's eyes on this golden target, $100,000. So this is the corrective structure. Okay, the market got to this high. This is the highest high. The market moved to it. It could not go further to break it. So for me now, there's a rejection. I see Bitcoin dropping towards the demand zone. Once it gets towards the demand zone, this is where my entry is. Okay, once it gets towards the demand zone. So literally, I'm going to have to remove this. And then this is our forecast for BTC. Okay, so once it gets towards the demand zone, where we have buys, massive buys, and also pending orders lying here, we're taking the buy on BTC USDT. Okay, but still, the market is reactive and not predictive, and BTC is wide, very volatile. So there could be just one kind that could still spike or break this reverse and then continue to push the upside. So, but once it gets to $100,000, I'll be expecting a massive not correction this time around, but reversal. Okay. Okay, this is a corrective structure. Thank you. This is a corrective structure. This one. But once once the target of $100,000 is hit, I'll see a massive rejection. Okay, and to the downside. So this is what I see currently for BTC USDT. And for the fundamental news, we use this particular Forex Live. And for the weekly market outlook, we see for today, which is Monday, we have Australian retail sales, which has already been announced. It was a positive news. Okay. Then by 8:30, we had Swiss franc retail sales. And then in 5 minutes time, we have unemployment rate. If it is higher than 6.9, it is bad for euro. If it is lower than 6.9, it is good for euro. So if this is bad, this could be the sell trigger because market work with time and price. This could be our trigger in the next 5 minutes for the market to sell. Okay, which is unemployment rate news, which is negative and it's going to make euro weak. So watching out for this news, we have Canadian manufacturing PMI playing out later in the New York session, US ISM manufacturing PMI, and Fed Waller is going to be speaking to us. Then I want to watch out for very high impact news like CPI, that's CHF CPI. So that will be tomorrow, Tuesday. Which other news? ADP. Yes, ADP has to do with, this week is non-farm payroll. It has to do with the private sector, employment in the private sector. So Wednesday, we're watching out for this particular news event to see how that plays out. Then we see report for the Fed chairman speaking on Wednesday as well, which is going to really determine the reaction of dollar. So watching out for that. Let's see if they have any rate decisions on Wednesday. Okay, so on Wednesday, any interest rate decision? No interest rate decision, just the Fed chairman speaking. So we'll be watching and reading the statement he makes because his statements can really determine what the central bank is trying to do, and whatever the central bank is doing, that's how the money flows. Okay, if they are either dovish or hawkish, it's going to determine the strength of the dollar and the weakness of the dollar, which is going to also determine buys and sells on Euro USD, AED USD, and also XAU USD. Also, little impact on BTC USDT. So on Friday, we have non-farm payroll. We'll be trading live on Friday for the non-farm payroll. So you guys shouldn't miss out on that. Thank you so much for watching to this point. I really appreciate. Please don't hesitate to smash the like button, share this content, and subscribe to our YouTube channel. We'll be keeping you guys updated on our Telegram and our WhatsApp. Click the link below to join right now and have a profitable trading week. Peace.